Hi guys, I just want to let you know my thoughts on the latest buy-to-let tax changes because there's a lot of landlords going potty over it at the moment. But really, it isn't actually that bad for the majority. Hi, I'm David Giles, the property guy. My vlog is all about helping people keep up to date with the local property market, whilst also helping people to build a robust and high-performing property portfolio. If this is the first video you've seen, then please click subscribe to make sure you don't miss out on any others. So let's kick off with a real live landlord client example of mine who earns $34,000 a year as a basic rate taxpayer. Now this client came to me really off. He'd been speaking to an estate agent, a friend of his, that said the tax changes are coming, you need to get out of buy-to-let, sell your buy-to-let property, you're going to start losing money. Can I just say, please don't take advice from estate agents like this. Not even advice from your parents, your friends, your colleagues, nobody, unless of course they are a property tax specialist. Now I should actually mention that I am not an accountant, and these videos shouldn't be taken as that type of advice. These are just based on my own personal experiences as someone that intricately understands how these tax calculations are done. So please get the appropriate advice because everybody's situation is different. So this guy is on £34,000 a year from his job, and he owns a 2-bedroom house that he rents out for £850 a month in Canford Heath in Poole. Now my lettings firm managed this property for him, and last year he spent £180 on maintenance. His mortgage interest is £350 per month, and each month that means he's receiving about £383 in pre-tax profit. So in 2016/17, his rental income for the year is £10,200. Running costs of £1,404, mortgage interest of £4,200. So on the old system, it allows him to deduct the full £4,200 in mortgage interest. So his taxable rental income is £4,596. So he would usually pay £919 in tax on this amount, leaving him with a net profit after tax of £3,677 for the year. Remember the estate agent that told him he's going to start losing money as these tax changes get phased in? He should sell his property immediately. What a moron.
They've done studies, 60% of the time it works every time. That does make sense.
Let me show you why. In actual fact, this client's tax bill won't change this year, next year, or even come 2020-21 when the full transitional rules have come into effect. You see, there's a mortgage interest rate relief that applies from 2017-18 onwards, which actually nullifies the additional tax on this gross rental income. You can see that although his tax on rental income in 4 years' time will be £1,759, compared to £919 now, a difference of £840, he gets a mortgage interest rate relief of £840 applied, which means he's in no better or worse off position. So if this guy hadn't come in to see me and taken the moron's advice, he'd be losing £3,677 a year in rental income and the capital growth on top of that. Now I know there's going to be some high rate taxpayers out there screaming at the screen saying, Giles, what about us? We're going to be screwed. Now I agree, there are some guys out there with huge portfolios that are highly geared with not very favourable interest rates, and you are going to feel the pinch somewhat, unless of course you've looked into some of the exemptions that exist. If you want to speak to my property tax specialist about that, you may find that you won't be affected either, so please get in touch. So before I go, I want to give you that high rate taxpayer example based on actually my average client, which is a high rate taxpayer with 5 buy-to-let rental investments. Okay, so the guy or girl on £50,000 a year in their current job with 5 buy-to-let investment properties. We'll take the example of somebody who's got, say, 5 one-bedroom flats that are renting out at £550 a month each. They have the properties managed by my firm, and they spend, let's say, £75 a year per property on maintenance, which is about right, £15 a month. So we can see by these figures that their annual employment and trade income is £50,000 a year. Now, they have a gross rental income of £2,750 a month, the mortgage interest at £458 a month, and monthly running costs, including maintenance and management fees, of £650 a month. So under the old rules, the rental income at £33,000 minus the running costs of £7,800 minus mortgage interest of £5,500, that gives a taxable rental income of £19,700. So the tax on that rental income is £7,880, so the net profit after tax is £11,820, purely on that rental income. So you can see over 2017, 18, 19 and 20 how the transitional tax rules changed this, but only slightly. So in full force come 2020, 2021, the rental income will be the same, let's imagine, at $33,000. Probably will have gone up by then, but let's just do a like-for-like example. Let's say the running costs are the same and the mortgage interest is the same. You'll see that the deductible mortgage interest isn't there. That's because they're not allowed to do it under the new rules. So the taxable rental income, therefore, will be on £25,200, not the £19,700 that it is today. So their tax on rental income will be £10,080 as opposed to £7,880 today. But they will have mortgage interest rate relief of £1,100. So their tax due on the rental income is £8,980 compared to £7,880. So actually, whereas today they will earn a net profit after tax of £11,820, under the full force of the new rules in 4 years' time, their net profit after tax will still be £10,720. Hardly a difference to cry about. Well, I hope you found this video useful, and it just shows, doesn't it, that if you delve deep into the figures like I do, there really is not that much difference, especially for the vast majority. An interesting fact, actually, that over half of the landlords in our country don't even have mortgages, so these guys won't be affected either. So for the very small few that are going to think about selling their rental stock, I can't see there being a huge wave of properties, as many predict, that hit the market soon. For more videos, articles and resources and property investment opportunities, please click subscribe and I'll be sure to keep you updated. My name is David Giles, the Property Guy. I hope you found this video useful and I look forward to seeing you all again soon.